Hi there, welcome back. Today I want to talk to you about tax refunds in bankruptcy. When you file a Chapter 7 bankruptcy, there's a good chance that you're going to lose a portion of your tax refund next year. And I want to tell you why, and I want to tell you how it works. So the first thing you need to know is that the reason why a part of your tax refund can get turned over to the bankruptcy trustee is because by the time you file your bankruptcy, you've already earned some of that refund. So let's say that you're in September and you file a bankruptcy. Well, you're not actually going to get your tax refund until next year, but you've earned about 65% of your tax refund as that year has gone by and you've paid or overpaid taxes through your wage withholdings. So when you file bankruptcy, it's almost like you had that money in a savings account that you couldn't touch yet. You'd already earned it. You just didn't have access to it. And so later on, the bankruptcy trustee is going to intercept or require you to turn over some of that tax refund. So we've got a couple frequently asked questions on these tax refund issues. Number one, how do I get around this? The answer is, well, this is really a math equation. We can't tell the trustee, I need the money for some tires. I need money for my daughter. That's not how it works. Like a lot of things in bankruptcy, this is just going to be calculated based on a math equation. What happens if I don't do this? What happens if the trustee tells me he wants my refund and I just don't turn it over? If you don't turn over the money, the bankruptcy trustee can revoke your bankruptcy discharge, make all those debts forever non-dischargeable, sue you, garnish you, and come after that money. So you really don't want to do this because keep in mind, you're discharging a tremendous amount of money. That's why you filed the bankruptcy. Turning over a little bit of your tax refund next year, that's just kind of the price of doing business. It's part of the equation, part of one of those things we look at when we talk about filing bankruptcy. So now, let's talk about the actual math equation. The first thing that we look at on your tax return is whether you have any part of the tax return that's exempt, meaning we can protect it in bankruptcy. And the only part of your tax return that we can exempt is the EIC box, stands for Earned Income Credit. Most people don't get an EIC. A lot of people who do get it, it's pretty small. But if your tax return has an EIC on it, that's money that does not get turned over to the bankruptcy trustee. The next thing that we're looking at on your tax returns is what's your total amount of refund for both your state and your federal combined minus that EIC. So now we get a number, sort of a subtotal. And what we do next is we calculate how much of the year had gone by when you filed bankruptcy. So for easy math, if you filed it on July 1st, half the year's gone by, potentially half that refund belongs to the trustee. If you file your bankruptcy in late December, well, now maybe 95% of that refund is exposed to the trustee. So when people ask, what's the way around it? What do I do about this? Well, if we look at what time of year you file your bankruptcy, that's the best way to adjust that math formula so that you don't have to turn as much money over to the bankruptcy trustee. The reality, though, is most of the time people file bankruptcy when they're forced to, and we can't just game plan this out a year in advance. But that's the formula. Now, once that formula is complete, the bankruptcy trustee has other math they're going to look at. They're going to look at how many creditors are in your case. They're going to look at other assets in your case, and they're going to do their own math assessment, combining it with that first tax turnover percentage amount, and they're going to make a determination of whether that refund needs to get turned over. So what we're really talking about here is math, and that's determining what needs to be turned over. And unfortunately, most people who file bankruptcy have some sort of tragic story, but the fact that you need the money isn't good enough. The trustee still gets that money. Now, I understand for a lot of people, this can be upsetting. This can be frustrating. What I ask everybody to do is just keep in mind where you were at when you filed bankruptcy. You had so many creditors coming after you. You had all of these issues. The bankruptcy is solving those issues. And yeah, it's never fun losing a little bit of your tax refund, but it's just for 1 year. It's one time, and it's really just the price of filing bankruptcy. Now, one last note. If you recently moved to Oklahoma from another state, or you're watching this in a state other than Oklahoma, this whole video might not apply to you because different states have different exemption systems that analyze these issues differently. So this is definitely an Oklahoma-specific video. Thanks, guys.